Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about H2O America quarterly report. H2O America provides a wide range of businesses and services related to water utility and other related services across the United States. The company's offerings include water production, purchase, storage, purification, distribution, wholesale and retail sale groundwater supply from wells, surface water from watershed runoff and diversion, reclaimed water, and imported water non-tariff services such as plus water system operations, plus maintenance agreements, plus antenna site, leases contracted services including sewer operations, other water-related services, linebacker protection plan for public drinking water customers in Connecticut and Maine, water services to residential, commercial, and municipal clients across various states, including California, Connecticut, Maine, and Texas. The decline in H2O America's stock price by over 13% in the past year can be attributed to several key factors. A negative outlook from S&P Global Ratings, citing concerns about the company's planned $540 million acquisition and potential execution risks, contributed significantly to the downturn. Additionally, analysts have pointed out that H2O America's aggressive expansion strategy has led to increased shareholder dilution and a substantial debt load. The company's high capital expenditures, projected at $2 billion over the next 5 years, have also raised concerns among investors. Furthermore, increased operating expenses, higher borrowing rates, and regulatory risks associated with state approvals for rate increases have all impacted the stock price. Market sentiment and valuation multiples have also played a role, with H2O America's valuation dipping relative to its historical performance and industry peers. The primary drivers of revenue growth or decline are multifaceted, reflecting both positive and negative trends in the company's financial performance. Revenue growth is primarily driven by rate increases in key markets such as California and Connecticut, which contributed to a 10% increase in operating revenue for the 9 months ended September 30, 2025. Additionally, an increase in customers and pass-through water costs also boosted revenue. Conversely, revenue decline was observed in other services, with a significant decrease of -60.6% compared to 2024 for the 9 months ended September 30, 2025. Uncertainty surrounding regulatory approval processes, integration challenges with Quadvest's business, and potential failure to achieve anticipated benefits from the acquisition pose risks to future revenue growth. These factors may lead to increased costs and lower than expected revenues due to integration issues. Net income and profit margins overview. The company's financial performance has shown a significant improvement in both net income and profit margins over the past year. For the 3 months ended September 30, 2025, net income increased by $4,639, 12.3%, compared to the same period last year, while for the 9 months ended September 30, 2025, it rose by $7,706, 9.8%. This trend continued with a year-over-year increase in net income of plus 21.6% for 2025 compared to 2024. Profit margins also saw an upward trend, with operating revenue increasing by 7.3% for the 3 months and 10.2% for the 9 months. The consolidated profit margin was 17.3% for the 3 months ended September 30, 2025, and 14.2% for the 9 months ended September 30, 2025. The improvement in net income and profit margins can be attributed to various factors, including increased operating revenue and efficient cost management. Overall, these results indicate a strong financial performance by the company, with both net income and profit margins showing significant growth over the past year. The company is indeed generating positive operating cash flow. This is evident in the financial summary, which states that the company has a net cash provided by operating activities of $181,283 for the year 2025. Furthermore, the cash flows from operations have increased by $27,217 compared to the previous year, indicating a growth trend. The company's financial summary reveals a significant increase in its debt level and interest expenses. While the total debt remains relatively stable at around $4.5 million, long-term debt has increased by $113,749. More notably, interest expenses have skyrocketed from $11,516 to $54,292, indicating a substantial burden on the company's finances. This trend is evident in both short and long-term periods, with interest expenses increasing by $2,614 over 3 months and $20,186 over 9 months. Management is optimistic about the company's outlook and strategy. Key highlights include the proposed transactions with Quadvest are expected to bring financial and other benefits, while investments in new business and growth initiatives will drive the company's strategy. H2O America focuses on 3 strategic areas: regional regulated water utility operations, non-tariffed services, and out-of-region services. Revenue growth is expected from rate increases approved by regulatory bodies, with costs associated with the AMI project to be recovered through these increases. Management also expects improved collection rates for accounts receivables as service disconnections return to normal operations. However, potential risks include delays or elimination of benefits due to regulatory approval issues and integration challenges. Acquisitions and divestitures overview. In recent years, several significant acquisitions and divestitures have taken place in the industry. On one hand, H2O America acquired regulated systems from Quadvest LP for $483,600, while TWOS acquired systems from Quadvest Wholesale LLC for $56,400. Additionally, an unspecified entity acquired Quadvest on July 15, 2025. On the other hand, Quadvest has proposed divesting its water and sewer utility business to an unspecified entity, pending Public Utility Commission of Texas (PUCT) consent. Furthermore, transactions with Quadvest's retail and wholesale subsidiaries are contingent upon regulatory approvals. These acquisitions and divestitures reflect significant changes in the industry landscape. The company has a history of paying dividends to its shareholders. In recent years, it has consistently distributed significant amounts to its investors, with totals reaching $43,607 in 2025 and $38,830 in 2024. However, there is no evidence to suggest that the company has engaged in share buybacks or repurchases. That concludes the financial summary for H2O America. Feel free to comment below, and I will be happy to answer them when possible.